Are you thinking about investing in rental properties, but you're not sure whether you want to do long-term rental properties or short-term rental properties? Well, today we're going to go over the pros and cons of each one of them. And afterwards, you're going to know exactly which one is the right strategy for you. Hey there, and welcome back to my channel, Brick by Brick Wealth. My name is Casey Franchini, and I am your real estate expert and guide to finding financial freedom through rental property investing. As you know, there are tons of strategies out there on real estate investing, and sometimes narrowing down which one is the best one for you is the hardest thing to do. So which one is right for you? Let me take a sip of my iced tea and we'll go over it together. So today we are going to talk about the differences between long-term rentals and short-term rentals. And we're going to go through each one of those factors today so you are able to make that decision at the end of this video. The first factor you need to consider is the time that you have available to dedicate to that strategy. With long-term rental properties, it is a set it and forget it situation. You do all the work up front with long-term rental properties to enjoy the freedom of not really having to do any work for the majority of the time afterward. For example, when you are investing in long-term rental properties, all the work is done up front. You find your market, you buy the house, you fix it up, you place a tenant. Your tenants on average might spend anywhere from 1 to 5 to 7 to 20 years at the property. Most months, I spend 0 hours managing my rental properties. I hardly get calls from tenants. I'll visit them every so often, and my average tenant stays 5 years. So all the work I did for buying the house, fixing it up, and putting the for rent sign in the yard was all done a long time ago, and I had the same tenants just giving me rent checks month after month after month with a call here and there, sometimes from some tenants that something is broken, and so I'll need to send my husband to fix it or call someone to go out and fix it. Very minuscule time required to operate a long-term rental property business. Now, the more long-term rental properties you have, the more calls you're going to get from multiple tenants. And at that time, you might need to then hire a property manager. But for the newbie starting out, owning 1 to 10 rentals is not going to take up much of your time. Now, for a short-term rental operation, this is more like a full-time job, depending upon especially how many short-term rentals you have. Even one short-term rental can take up a considerable amount of your time. Imagine having to talk to a new tenant every 3 days. You get a booking for 3 days, they move out, your constant communication, always answering how to turn the television on, always answering emails on what cool things are to do around there, always having to provide gift baskets and fix things in the property that were broken or stolen or misplaced or damaged, always having to make the property perfect and frequent visits. So the life of a short-term rental property owner is very busy. So you must have a lot of time available to manage your short-term rental properties if you are planning on managing them yourself. Now, you can pay a local co-host 20 to 40%, depending upon where you are in the country, to manage that for you, but it does eat into your profits. So you need to ask yourself this question: do you have the time that it takes to manage short-term rental properties? Do you want to invest the time that you do have to manage short-term rental properties? Would you like the freedom of long-term rental properties to just set it and forget it? If you are a more busier person, short-term rentals might not be the best option for you. The next factor you need to consider when making your decision between investing in long-term rentals or short-term rentals is your specific financial situation. Sometimes your financial situation is going to make the decision for you on whether you can go with short-term rentals or you can go with long-term rentals. If you're looking to go the traditional, conventional loan route and get a loan from the bank, you're likely going to be putting anywhere from 20 to 25% down. So let's talk about the financial situation regarding long-term rental properties. Okay, if you plan on going the conventional conforming route, getting a loan from the bank, you're going to be putting 25% down. You'll be doing a non-owner occupied investment loan. 25% down with a Fannie Freddie loan is going to give you the best interest rate available. For long-term rental properties, and this is what I help people with every single day, all day long, so I can tell you with certainty, if you're looking for a cash flowing property, the property's max purchase price is going to need to be under $200,000, especially with today's interest rates. So when it comes to long-term rental properties, you're going to have significantly less money invested in a long-term rental property than a short-term rental property. So if your budget is tight and you don't have a lot of funds to work with, a long-term rental property might be the safer bet for you now. A lot of times with long-term rental properties, you can rent a property that is original in an average condition with avocado green tile and parquet flooring and popcorn ceilings from the 1970s. You won't have to do any updates, and a lot of times you can still cash flow without putting significant rehab or repair into upgrading these homes and making them beautiful. Now let's talk about short-term rental properties. For short-term rental properties, you may be able to obtain a 10% down owner-occupied second home loan and not have to put the traditional 20 to 25% down. However, you will still be hit with that investor interest rate. If you don't plan on using it for your second home, or you already have 1 or 2 second homes and you're not eligible for that, then you will have to put down 25% down if you plan on going conforming conventional and you want the best rate available. Now, that's the same as long-term rentals. So what's the difference, you might say? The difference is nobody wants to vacation in their neighborhood. Am I right? So when you want to go on vacation, you want to go to the beach, the lake, you want to go to town, you want to go somewhere really cool. The mountains, those places cost a premium. Location, location, location. It's unlikely you're going to find an amazing short-term rental property for the same price that you could buy a long-term rental property at. That being said, vacation properties, short-term rentals are luxury properties. They're going to cost significantly more. Most short-term rentals that I see are $500,000 and up. Not only do these properties cost more, they also need to be competitive. So when you're looking on Airbnb or VRBO and you're looking to see how properties are decorated and what their furnishing looks like and how renovated they are in their kitchens and bathrooms, just know that if you don't meet or exceed the quality of renovation and furnishings, your property isn't going to get bookings. And if you can't hold out for 6 months with no bookings, doing a short-term rental might be a little too risky. So when it comes to picking long-term or short-term rentals and you're using your financial situation as a metric to help you decide, you have to ask yourself, where are you with your finances? Do you have enough money to hold a short-term rental without any bookings, or will you be underwater? Do you want to spend the time available? Do you have the money for significant rehab on a short-term rental, making kitchens top-notch and beautiful with white quartz countertops and white shaker cabinets, brand new flooring, paint, renovated and upgraded bathrooms, a beautiful landscaping, plus all the amazing decor and furnishings to go with it? If you don't have the funds for that, perhaps a long-term rental might be a better strategy for you at this time. Now, the fourth metric that you can use to discover whether short-term or long-term rentals is best for you is your risk level, which also correlates with your cash flow desire. Long-term rental properties are low-risk investments. You do things the right way the first time, you repeat. Your equity is going to grow, your rents are going to rise. It's a fail-safe investment option. 90% of Americans become rich through owning real estate, and long-term rentals is leading the way. Remember, there will always be a demand for single-family houses. And even if we all live in this Facebook matrix and we have a thing strapped to our heads and we sit in a pod and we never leave our room, we'll still need a place for our body. So houses will always be in demand. That being said, with low risk comes lower cash flow. Yes, you are still going to cash flow, but you're not going to cash flow as much today in year one of buying your rental property as you possibly could with a short-term rental. Short-term rentals are high risk, high reward. Long-term rentals are low risk, low reward initially. The reward increases over time. But with short-term rentals, the problem is there are so many external factors that could affect your cash flow and your profitability. One of those being HOAs. If you buy a property in an HOA and all of a sudden they change the rules, now you can't operate your short-term rental anymore. Does it cash flow as a long-term rental? Probably not. Can you sell it for a profit? Let's hope so. Another scary thing could be another pandemic. What if the government shuts everything down and nobody can go on vacations anymore? Your property is sitting vacant. You're not getting bookings. Can you hold the property with all of the expenses, utilities, yard care, cable, internet, for several months without making any money? What if there's a loss of interest in your area? People aren't really wanting to go there anymore, or there's too much competition and you're having to overcompete and it's costing you more and more money to operate and you're becoming less and less profitable? What if the city or county decides that they're going to ban short-term rentals? And this has been happening all over the country for several years. Counties all over the place are shutting down short-term rentals, and people are having to sell or turn their property into a midterm or long-term rental. So you need to ask yourself this question: how risky are you with your investments? And how much do you need the cash flow versus how much can you go without it? I have a rule of thumb here, and my rule of thumb is for every 4 long-term rental properties that you buy, treat yourself to a short-term rental. Because if shit hits the fan, your 4 long-term rental properties will be able to cover the mortgage of a short-term rental. And I would love to hear your opinion on whether short-term rentals or long-term rentals are the better investment. So let's chat about it in the comments below. Thank you so much for joining me today. If you found anything helpful in this video or you enjoyed watching, please hit the like button, subscribe, share, do all the things that helps me with the algorithm and helps me want to make amazing content for you. And until next time, keep building your wealth brick by brick.